When I saw this game plan by Tom Lee, it was absolutely mind-blowing aha moment. An eye-opener that I will tell you everything in this video. And also we will talk about the recent sell-off and why you should not be worried at all. And this is not what I'm saying. This is what billionaire Peter Lynch will tell you today in this video. So make sure to subscribe, like, and let's go.
Welcome to the game, I'm the Wolf of Dubai.
So if you don't know me, my name is Danny and I'm the most watched stock market YouTuber from the Middle East. I'm also a Guinness World Record holder and I was early on stocks like Tesla, Palantir, Hood, Nvidia. And my subscribers actually bought with their profits apartments like this lady here in Stockholm or this guy in the US. He bought even a house. Okay, so maybe it's worth to stay tuned and make sure to subscribe and smash that notification bell so you don't miss any new video on X10 stocks that can go 10, 20, 30x from here. And one more thing before we diving in, make sure to check out x10daytrading.com. This is my own product, our own software that we created for you to benefit from day trading from my team that sends out all day trades on the US stock market, options which can go 100, 200, 300%. We use very small fraction of your portfolio. It's all done for you. If you want to check it out, schedule a call with me and we see if we can help you as well. Now, obviously, whatever I say in this video, you have to make your own research and this is never financial advice. But listen to this clip of Tom Lee, which is absolutely insane because we are watching every single clip and we're going into extremely detail what this could mean for Bitmine and for Ethereum and what he means and what could be his game plan, because I think he has a massive game plan that he actually has with Bitmine and I think it's absolutely insane. But listen to this clip and see if you can catch it, but I will explain it afterwards, okay? So let's have a look.
This is not going to be a popular statement because there's a lot of tribalism in crypto. But before this year, I would have considered Ethereum like a really good, reliable chain, but without any products being built on it, it shouldn't really do well. But because of what's happening with AI and with Wall Street and, Project Crypto, I think Ethereum's essentially the value of its protocol layer, like, Union Square Ventures calls it the FAT protocol, is now going to be more valuable because we're tokenizing everything on Ethereum rather than just gold. Like, so if gold is a $21 trillion market, tokenizing the real world is orders of magnitude larger than gold, which means Ethereum probably will flip in network value versus Bitcoin.
Flip as in outgrow.
Yeah, it'll have a higher network value.
So that argument for Ethereum is really interesting to me because one of my pushbacks was going to be, and it still will be, but you've kind of half answered it, is when you look at the idea that crypto is an alternative to fiat currency, obviously one of the arguments is there's limited supply. Totally get that. As you said, Bitcoin supply has already nearly been fully mined. But one of the arguments I always think of back to that is, yeah, but there's quite a few different cryptocurrencies. And what's to stop someone founding a new cryptocurrency? And here's Tom, who I really trust in some of these future-looking things, flipping his allegiance, maybe it's not quite the word, from one to the next one. And that surely is a pushback to the argument that these are great alternatives to otherwise fiat currencies who have an unlimited supply.
Yes, I understand that. I think that the distinction to make is that I'm not bearish on Bitcoin because I think Bitcoin will get to 1 million.
But what about all the other cryptocurrencies?
Well, other cryptocurrencies don't have the network value because otherwise they're just software chains, meaning...
So you don't really believe in Ethereum as a currency. You believe in it for other reasons.
That's right. Yeah, I think that the narrative of storing value is really Bitcoin's use case. Ethereum's use case is that it's actually going to be used and burned. So Ethereum gets consumed through gas fees, and then staking is how you produce an Ethereum. That inflation rate has been below Bitcoin, actually. So if you look at it as monetary supply, Bitcoin's monetary supply is actually still growing faster than Ethereum.
So let's just touch on, because you said the Genius Act, obviously the way in which this new administration has embraced crypto. One of the reasons why, and we mentioned Jamie Dimon in the last episode, I think a lot of those people were bearish crypto 4 or 5 years ago when I was on CNBC every day. And certainly why I was bearish on it then was there's no way any government's going to allow this to grow significantly because they need to be able to monetize their debts. They need to be able to control things like this and the US and the dollar in particular. So how big of a turning point was that this administration has, whatever the details of the act, they've embraced crypto? And was it foolish for the United States to do that? And will the dollar's status diminish as a result?
Yeah, if I could give a little historical perspective, when Tether created the first dollar stablecoin, and they built it on Ethereum, their idea was someone doesn't always want to be long Bitcoin or another crypto. They want to be long something stable. And crypto holders weren't really allowed banking access. So they didn't have an off-ramp. So Tether built a dollar-backed coin called a stablecoin, USDT. In 2017, Google and the UT Austin wrote these papers claiming Tether was just a fraud. And the only reason crypto went up was because of Tether creations. Okay, so in other words, it was immediately tried to be viewed as something fake. But then Tether has since grown, and of course, stablecoins have really grown in popularity. Merchants outside the US love stablecoins because they don't suffer the chargebacks. You know, credit card companies merchants eat fraudulent transactions. So merchants, they get paid, it's just as good as getting $1. In Turkey and a place like India, Tether trades at a premium to the dollar because people prefer to get that over cash because it's hard to get robbed. You know, you can use a stablecoin to buy real estate in Dubai now using Tether. Like $100 million transactions. So it's actually being used in the real world. Actually, stablecoin usage, 80% is outside the US. But the reason the US administration starts to like it is, number one, crypto is essentially 100% quoted in dollars. In GDP terms, the dollar is 27% of global economy. It's 55% of central bank reserves is the dollar. It's 80% of traditional financial market pair quotes. So the synthetic dollar, which happened in 1971, made the dollar 80% dominant. In the crypto world, the dollar is 100% dominant. So the US wants us to financialize into crypto because everybody prefers to get $1. Collectively, the stablecoin industry is about $280 billion of outstanding dollars. They are now the 12th largest holder of treasuries in the world. Japan owns $1.2 trillion of treasuries. Treasury Secretary Bessent thinks this market will get to $4 trillion. That would make stablecoins the largest holder of treasuries in the world. So it'll be backstopping the entire treasury market soon.
So as you can see, he talks about, Ethereum and the stable coins and everything, but he explains one important concept. In Ethereum, it's this way. If you use Ethereum for stable coins, for transactions, and so on and so forth, you pay gas fee. The gas fee is actually you burn Ethereum on the network, okay? Ethereum gets less and less. Now you say wait, but there is actually the same amount of Ethereum, right? Since many, many months and years, around 120 million. Yes, but this can fluctuate not only to the upside, but also to the downside and have a deflationary effect, which is absolutely insane. That means that Ethereum can go ballistic because staking is the method of producing more ETH. And usually it's quite balanced, okay? So the usage is quite, equivalent to the staking of the Ethereum holders, right? Now, what happens if the usage goes absolutely insane and the staking is not catching up? Yes, then you burn much more Ethereum and less Ethereum gets produced. So actually one Ethereum gets worth even more, which is absolutely phenomenal. So, and now I was thinking, well, okay, let's go back in history that that happened and what happened actually to Ethereum price. And before we diving in, make sure to check out extenddaytrading.com if you want us to trade for you on everyday basis, all done for you. You just have to switch on the software. It looks like that, where we can make on a day maybe 5% up in your portfolio, right? If you have $10,000 or more, check out extenddaytrading.com, schedule a call with me personally, and we'll see if we can help you as well. Now imagine the following. We're going back in time. And when we go back in time, you can actually see that these instances happened already. Post-merge, early deflation. September 2022 to January 2023, Ethereum supply turned net deflationary briefly in January 2023 due to high gas fees. Price, Ethereum rose from 1,200 to 1,600, which means 33% up. Another instance was the meme coin hype and the high gas free activity that was somewhere around like April and May of 2023. On-chain activity, especially meme coins like People, caused very high gas fees. So lots and lots of Ethereum got burned and got erased from the network, okay? They never come back. So Ethereum went deflationary, burning more than it used, okay? Ethereum climbed from 1,800 to 2,100, a 17% increase. And another quick high activity was early 2024, where networks saw a spike in usage, restaking hype, eigenlayer, LRTS, and the burn outpaced issuance in some weeks. What happened? Ethereum went from 2,200 to 4,000. And now comes the catch. You remember that everyone is asking, why does Tom Lee always say we can stake Ethereum, but we don't do it yet? Now think about it. They want to get to 5% of Ethereum, and maybe after they reach it, I think somewhere in mid-October, and then they will go maybe for 10 or 15% of Ethereum. Okay, imagine that. And they still decide to not stake, to not produce more Ethereum. Ethereum usage will be more and more and more stable coins, other coins like, or chains like Robinhood. We discussed this in another video. Just type in, Robinhood in my channel, you will find it. And imagine the following. And this is just, maybe I'm totally wrong here, or I'm an amazing genius. Okay, one of these two things. Imagine they will not produce staking reward for a very long time until Ethereum will have so much gas fees that Ethereum will go deflationary, and Ethereum by then maybe will be $10,000, will go very quickly and aggressively to $30,000. Do you know what this could mean for Bitmine? This could mean that we could see like a crazy increase. I mean, if Wall Street comes to the idea that Bitmine has this kind of power and Ethereum goes through the roof, and it's all because Bitmine is not staking, I think then we see $1,000 stock in Bitmine faster than you and me can say Tom Lee, okay? Or Katie Wood, or Peter Thiel, or Bill Miner, or whoever is one of the billionaires investors in Bitmine already. So we are early. And I think this is something that nobody discuss out there. You are here on the right channel, so make sure to subscribe. And if you want to be part of my personal group, then check out extenddaytrading.com, because there I'm sharing everyday market insights, as well as, most importantly, we trade for you. We created our own software that was never done before, so we can trade for you on daily basis on the US stock market into your portfolio. You just have to switch on the software, and the rest is done for you. If you have $10,000 or more, check out extenddaytrading.com, and then we have a call and we see if we can help you as well. Now, there's one more thing I wanted to talk about, okay? Because it seems to be one of the most important topics for you guys, because there's a lot of bearish sentiment right now, okay? If I go to Bitmine, you see that over the last couple of weeks, we have a drawdown of about like 37%, okay? From 70 to around like 43 or $44, okay? Now, when we started to talk about Bitmine on this channel, don't forget, the OGs know. And by the way, let me know in the comments when you started to watch me, and also where you're watching from. I'm super excited to see from all over the world where you're watching from, okay? So we started to talk about Bitmine when it was a $30 company. So it went up like 120% in the very top, but it also, we are still very, very profitable on the investment, since we talk about here on this channel. Okay, so it's very important that you watch my videos because every now and then we find a new company very, very early. Now, let's talk about the drawdown. When people are worried, this is first a great bullish sentiment for me because I have seen that in so many cases. Okay, when I invested into Tesla when it was a $17 company and everyone was bullish and the stock went to $6 and I put my life savings into it, I just was lying in bed. There was bad news even, which we don't have about Bitmine, bad news about Tesla and Elon Musk and everything. And I was like, how I get more money after I invest my life savings to put more into Tesla. But I didn't have that money. Okay, so I just like saved like 3,000-4,000 from my salary and I have put it into Tesla every single month. Okay, I did nothing except like putting it and making videos about it. And then something happened, which was an absolute explosion because as more bearish sentiment there is, and there's always market corrections, specifically in the seasonality that we are in. If you look watching this chart, you see that end of August, September and October is the most volatile, usually weakest months of the stock market. Okay, so expect maybe even a $35 or $30, but we don't know. Maybe Ethereum will go through the roof and Bitcoin will go through the roof because everybody expecting this and it will do the opposite. And that's why it's very, very hard to time the market and just, buy on regular basis. But this is never financial advice. This is what I'm doing. I'm buying between like $3,000 to $5,000 every single day, and I'm building the position up and I wish I could put $50,000 or $100,000 per day. Okay, but for that, you need to watch a little bit more. So make sure to subscribe, guys, because this is very important. Now, if you don't want to listen to me, okay, you say like, hey, this guy have achieved nothing, just a world record as be one of the most watched stock market YouTubers, and he was early on all of these companies, but still you think that I do nothing, then just listen to Peter Lynch. Peter Lynch is one of the greatest investors on Wall Street. He did it very extensively for about, I think, like 13 years with his Magellan fund. And his Magellan fund went from 13 million to 18 billion, or other way around, 18 million to 13 billion, something around that, but absolutely insane. So listen to what he says and let's dive and analyze what he actually means and how you can take this for your own personal investor life.
Your philosophy is simple, and I'm remembering this from the previous book. I think we're now talking about the previous book.
Correct.
Your philosophy was, if you find something that you identify with. I remember there was a story of your wife and her hose.
Yeah.
Your wife kept saying, these are
legs,
the legs and panties. Your wife said, these are the greatest things I've ever seen.
Right.
And when your wife said that, you knew that this was a product that was better.
Right.
You used to stay at La Quinta Motel.
Right.
And the service was better, whatever was better.
Right. The price is good.
And the price was good too. And you said, this is a place that I can determine. I, Peter Lynch, can tell that this is a good product, right?
That's right.
And if these people are making a good product, then their earnings are going to go up, therefore the stock's going to go up.
Right.
And that's the kind of decision-making process you ought to go through.
Right.
Do I have it?
You've got it exactly right. Well, I don't think people understand there's 100% correlation with what happens to a company's earnings over several years and what happens to the stock. If the company, McDonald's, has done very well as a company,
right,
the stock has done very well. People worry about too much money supply, what's happened to the price of oil, who's the president, who's being nominated for the Supreme Court,
it's all
the ozone layer. It has nothing to do. McDonald's earnings go up the next 10 years, the stock will go up.
Yeah, but what they will say to you, Peter, is that, as you know, and why am I telling you this, but anyway, it's fun to tell you this, they're telling you that these other things influence the amount of earnings of a particular company.
Yeah.
If we're in a recession, people are not going to spend as much money on going to the movies or whatever they do.
Right.
And therefore, you got to pay attention to these other things because they impact on earnings.
They are very important, but you have no idea of knowing what they're going to do. Alan Greenspan's the head of the Federal Reserve.
Right.
He cannot predict interest rates.
Yes.
He'd be the first to tell
He
you.
can influence them, but he can't predict them.
He cannot predict what long-term interest rates are going to be 1 year from now, 2 years from now, 3 years. He's even surprised how low they are now.
Right.
So how am I supposed to predict interest rates? How am I supposed to predict the economy? You certainly remember the recession of 82.
Yes.
1982, we had a 20% prime rate, 14% unemployment, 12% inflation. I don't remember anybody telling me in 1980 or 81 that was going to happen. Yeah. All of a sudden, we had the worst recession since the Depression. I didn't read about it in the paper. So it's crazy to think about these things.
Here's a quote from you. I own Dunkin' Donuts. When you own Dunkin' Donuts, you don't have to worry about Korean imports. You don't have to worry about M2 or M3. These are money supply figures, aren't they?
Yep.
And what's happening to the money supply? This is the way you make money. If you don't understand what the company does, you should not be in it. If you could predict the stock market, you could predict the economy, you could predict interest rates. If you go buy the wrong stocks, you're going to lose half your money anyway.
Right. I'm saying people have natural advantages.
Yeah.
Let's say what you do for a living is you're involved in the restaurant industry.
Right.
You supply paper products. You supply kitchen equipment. You help build restaurants.
Right.
You saw McDonald's. You saw Chi-Chi's. You saw Chili's. You saw Cracker Barrel. You saw Dunkin' Donuts, Kentucky Fried Chicken, Taco Bell.
These are all success stories.
These were 40-fold. You made 40 or 50 times your money. You don't need to make that kind of money many times in your life, right?
Yeah, no.
That's all you had to do was follow the restaurant industry.
Yeah.
People are in industries. They're in the publishing industry. They're in the chemical industry, the paper. Why don't they just stay with an industry? You only need a few stocks a decade. How many good stocks do you need in a lifetime? Instead of people that are in the restaurant industry, they're buying biotechnology stocks.
Right.
The people in the chemical
know
industry
nothing about
know nothing about
biotech.
it. The people in the chemical industry are buying oil stocks.
Right.
It's absolutely absurd. People don't understand their natural advantages,
Yeah.
and they don't use them. So that's bad, number one. But worse, number two, is if you don't think you're a good ice skater, or if you're convinced you're not a good cellist, you're not going out and try it. But people are buying stocks anyway.
Yeah.
They're not discouraged. They just think it's a gamble.
Yeah.
So therefore, they go forward and they bet on one stock for a week and a half, and it goes up, and they make $2 on it. Then they sell it, and they buy something else. When 3 years is over, all they've done is generate a lot of commissions, and they've probably lost money. That's a mistake.
So your advice is what?
If you don't understand a company, if you can't explain it to a 10-year-old in 2 minutes or less,
Yes.
don't own it. Because when it goes down, let's say the stock goes down 2 points.
You won't understand what's going on.
What do you do? Do you buy more? Do you flip a coin?
And chances are your broker doesn't either?
He or she certainly doesn't know about
Yeah.
it. I mean, who knows what all these things are with auto back planes and mega flops? Who knows what all this?
So buy what you know.
Buy in your industry. Buy what you know. Buy local
Yeah,
companies.
so suppose you don't have an industry. I mean, you don't really...
You buy local companies.
Right.
Companies in your own industry. 10 years after Walmart went public. 10 years after
Walmart.
10 years after it went public. It's a 25-year-old company now.
Right.
You could have bought the stock and made 50 times your money on it. 50 times.
This is, if you bought it 10 years
After it was public already.
Yeah.
It already gone up 5-fold. So you could have made 250-fold. But I'm saying, let's say you were in a town, they came into it and they said, boy, these prices are great. They're doing terrific. I like the bargains. And you checked it out. You spent a little bit of work on it.
Yeah.
I mean, people are very careful. When they buy a dishwasher, they do some research. They'll put $10,000 in some stock they hear on a bus. So if you did a little bit of research, you say, Walmart's only 10% of the country. They're not even saturated there. Why can't they go to the rest of the country?
So is this is more of the same? Is it what it is?
It's more of the same. Plus, I show examples. It's a touch more detailed. It actually shows me in action.
Right.
I picked 21 stocks early in 1992. Some work, some don't. I follow those companies. Some of the companies, the fundamentals deteriorate. Some they improve. I watch those companies go through the year. I also explain the retail industry. I try and make it very simple. And I talk about a wonderful example. There's a 7th grade class.
Yeah.
The teacher of that read my book. And my first book that you were talking about, you and I did a show on that in Washington.
Right.
You remember that show?
Right.
This is
Right.
a long time ago. She read the book, and I said, if you made it through 5th grade math, you can do it in the stock market. She says, okay. She started teaching it in 7th grade,
Right.
7th grade class. These kids had to study companies. They had to look at their balance sheets to see if they're solvent.
Yeah.
And they picked stocks. These stocks were up 69% over 2 years when the market was up only 20. And they picked stocks like Limited. They picked The Gap. They
Right.
picked Walt. They understood these companies. They also picked IBM. I lost money on that too. I mean, everybody makes mistakes.
Everybody did, yeah.
But I'm saying this was a school, St. Agnes' School in Arlington, Mass.
Right.
But in addition, in the decade of the 80s, there's 8,000 investment clubs. These are amateur, sort of
Right.
average people just investing. These investment clubs, 62% of them, of these clubs, beat the market. In the decade of the 80s, only 25% of professionals beat the market.
Let me go back to one other subject. You're coming back to Fidelity, aren't you? Aren't you going to do something?
When I finish this book, I've been working about 1 or 2 days a week the last year and a half on this book.
Right.
Now I'm done with the book. I'm going to go back to maybe 1 day a week working with the younger analysts, just listening to them, talking to them. I'm not telling them to buy Xerox,
So you're not
to sell
rejoining your
Xerox.
old lifestyle.
Not totally. I'm not going to run another fund. 13 years was plenty of running a fund. I'm just going to work with younger analysts, let them ask questions. I'll ask them questions. It's going to be a lot of fun.
Now, do you manage any money for anybody other than yourself?
No, manage. I manage money with other people for some charities.
Right.
But no, I don't manage anybody's accounts.
You're not
Zero.
doing some mutual funds,
No,
pension
zero.
funds, some
Nothing. I'm out.
university
Went cold
fund.
turkey. No.
All right.
You
Cold turkey, did you?
Cold turkey.
Now, are you happy you did this? I'm obviously
delighted. It's great.
And you like your new life?
Oh, it's fabulous. Yeah.
So he actually says, don't make stock market very hard because it can be easy. And you know what is also easy? Becoming a day trader with our Extend Day Trading program, because we trading for you with our software. Just switch it on every single day and receive all our day trades that our team, that my team on everyday basis research and put out with our software directly into your portfolio, right? It's all done for you. If you have $10,000, then go on extenddaytrading.com, the first link into the description, the first link into the comments, and check out and make an appointment and speak with me directly, and we see if we can help you as well. But stock market can be quite interesting and easy, okay? Many people try to complicate it. For example, with Bitmine, right? Everybody is asking me in the comments like, what do you think about the lockup period? What do you think about this and that? And what happens if the stock goes to 25? Well, I buy a little bit more, right? I would love to see Bitmine at 20 or 15 or 10 or 5 even, or 4, the same price that Peter Thiel went in, but most probably this will never happen, okay? So don't think about this crazy concepts, and market sell-offs are totally normal. That's why it's the best to understand what you are buying, okay? Make your own research. Understand why you are buying Bitmine in the first place. And when you're buying it and you're liking it at 60, then you should love it at 45, and you absolutely should sell your house and your family in it and buy more at 20, if that will be ever the case, okay? But that's obviously never financial advice, so you make your own decisions. So you are always responsible for your own trades, for your own investments, and just make sure to watch me every single day. I'm trying to preaching that, and I feel that Peter Lynch is one of those guys beside, Warren Buffett or other investors that were so tremendously successful and doing it very, very simple form so everyone understands it. I also recommend go out there and get the book of Peter Lynch, One Up on Wall Street, and he has like 2-3 other books. Buy them all. They cost maybe $30 to get them all. Read them. Very simple, very plain English, like super simple. Do this for you. Do this for your financial future, because then I can promise you that the grass is greener on the other side. And I see you tomorrow for a brand new vlog, and make sure to check out extenddaytrading.com. If you want us to trade for you in your portfolio, then make sure to check it out. If you have $10,000 or more, schedule a call, and I see you tomorrow with a brand new video about a 10x stock.